Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw sellers active at the 45 half resistance, and on the downside, ES ended up testing the 34 half support, where responsive buyers were active on multiple tests. At this point, heading into the open, we're going to be using the 34 to 36 as a very short-term bull bear zone, the micro bull bear. And bigger picture, the market is pulling back now into the breakout area from October 22nd. That's the day where we got that very strong and high momentum, high volume breakout to the upside. And this is a retest of that breakout. So at this point, the market has pulled back enough that responsive buyers can be active at these lower prices. So a push down into, for example, 32 quarter, 30.75, and especially 26 half to 28 half can attract responsive buyers. The 34.36 is going to be a reference area to tell us whether buyers are indeed stepping in. So for example, if the market pushes down for one more test and goes down to 32 or 30.75, but then returns back above 34.36, that would be a confirmation that the buy side is stepping in, and from there the market can go up to the previous close, the gap fill at 40 half, the 44 to 46 pre-market resistance, and in the event of strong buying, we can see a move back up towards 55 half to 58. So the initial resistance zone at 55 half to 58 is a potential upside target if we can get a rejection off of the micro bull bear here. So there is a decent amount of upside potential here, which just raises the odds that responsive buyers can be active. So off the open, simply a lack of weakness at these prices can result in responsive buyers jumping in. And in order to go lower, we would have to see sustained downside momentum and continued excessive weakness in the market. And absent any strong selling, responsive buyers can be active at 34 to 36 and the support areas below, as we've seen so far. So heading into the open, we are going to be cautious on the short side simply because of the aggressive location. The market is trading at some pretty decent support, and buyers can step in, as we've seen even in the pre-market session. So for that reason, we are going to be careful on the short side, focus more on long setups unless we're seeing some very clear signs indicating potential for another swing lower, which would have to be via excessive weakness on the advanced decline, the NYSE tick holding below zero, sustained downside momentum, and weak price action in the other markets as well. But absent any strong selling, buyers can be active here for a move back up to 44.46, 49 to 50, and then the final upside objective would be 55 half to 58, and that is an area where responsive sellers can step in. And then 62 to 65 is a bit of a stretch. It's unlikely that the market will get there today, but in the event that it does, that's another area that sell side can defend. So those are our main thoughts heading into the open. Let's see if the buyers can step in here at these pretty decent support areas. That'll help set the tone for the day, and we'll take it from there.